All right, my little crypto keepers, welcome. Welcome to Dr. Chef's Crypto. I'm Dr. Chef, and this is July 4th, 2021, and we're going to talk about buying the dip, the current market, and all kinds of ways to figure this stuff out in our continuing series on crypto for the masses, crypto for anybody trying to learn this stuff. Welcome. So, I'm Dr. Chef. Welcome to my channel. As you already should know, this is not formal advice. I'm not a financial advisor, and this is for education, entertainment purposes only. So, let's just jump right into it. What are we looking at today? What are we talking about today? And where are we? And really, it's not that big of a difference for weeks and weeks and weeks. Here's where we are. We're in a thing called the range. So let me see if I can explain this. The range. What that is, and I've explained this in previous videos, so if you haven't seen this before, go ahead and look back at previous videos. But this is what a range looks like. There's a top and a bottom. This bottom we refer to as support. This top we refer to as resistance. And during a range, we call it trading sideways. We've been doing this for over 6 weeks, headed into 2 months now, where it just goes up and down within this range. That's fairly common. I know that everybody from the last year or so is used to seeing, big explosions up to all record highs and all these things. But that happens sometimes, and sometimes we stay in this range where we trade sideways. Some people refer to that as bearish because it's not going up dramatically. I look at it as not bearish or bullish. I look at it as a sideways trading range that we are going to bust out of sooner or later. And when we bust out of this range, then we're going to be bearish and bullish. That's my personal, but we could say for the time being, we're just kind of bearish because we're not really thinking of anything major that's going to happen. But anyway, if you look at this, you will notice that we have been zigzagging now since about 18 May until about the 4th of July. Now this red is from a couple days ago when I made this graph. So let's go look at that real fast, and let's take a look at what this looks like. Let's go with, can you see that? If that's not a range, I don't know if there's ever been a range in humankind. Look at that. It's almost a flat line. That's the 12-hour chart for Bitcoin. It means that each of these candles is 12 hours long. If you look at a 1 day, it's going to be very similar, except we're going to be looking at a little bit of a difference, but because the chart expands out to see the previous days. But this is the range we've been in right here. If we go in closer, I'd like to point out over here that this is the last 3 days. This is the last period of time right here. You see, we're in a 1 day. So that's actually climbing. Look at that. So we're sitting at 35, dead center of our range right here. So the first thing we need to talk about is what we can do if we're in that range, okay? So for instance, let's say that we are tracking all of this up and down. Sure, it looks like sideways trading. It looks boring, but think about it this way. What's this? 1, 2, 3, 4, 5. 5 times in the last 6 weeks, Bitcoin approached 30,000. And as a matter of fact, at one point, it had been 28, just for a few hours, but it had been 28. So 5 times in the last 6 weeks you had a chance to buy Bitcoin around 30,000. I'm sure some of you did, or bought other things when they were low. This is called buying the dip. That's the subject of this class today. Well, you can do anything you want to once you buy that dip, right? You can sell it, or you can hold it. I suggest holding it till it busts out, because we know that this Bitcoin is going to be at least 60,000 again, and probably 100,000, and maybe more someday. So why not hold on to it? But think about it this way. Think about it. What if you were to utilize this information? Once you do this a couple times, you see you're in a range, you can tell what's happening, right? Chances to buy, but look at these chances to sell. So for instance, right here, you could have bought Bitcoin at 30,000 and sold it at 40 just a couple days later. You could buy it again close to 30, sell it again close to 40. You would have made $10,000 with one single Bitcoin. You would have made $10,000 in 2 days. You've had 1, 2, 3 chances in 6 weeks to make about $10,000, give or take, just with one Bitcoin. Now, if you had a Bitcoin that you bought for 30,000 and you made 10,000 3 times in a row, what do you got? 2 Bitcoins. So you could literally start with one little seed, a single Bitcoin, and then you could go double it. Now you got 2. Then in the last 6 weeks, you would have made twice your money, right? You'd make 60. Now you got 4 Bitcoins, right? Now you understand what I'm saying? If you just played with one chunk of money and watched these charts this carefully and knew how ranges worked and understood all this, you'd be sitting in a world right now. And I'm not even talking about doing crazy stuff like leverage, okay? You can leverage these trades. If you're watching a dip and you're watching a range, you could go, okay, take these 2 times here in just the last couple weeks here, just the last week or so. 2 chances to buy at 30. Let's say we bought 30. Yeah, it'll fake you out. Sometimes it goes up, comes back down, goes up, comes back down. Right now, we're on the way back up. We're going to be somewhere out here very soon. But let's just imagine that you set it up on the computer. I'm going to buy 10 Bitcoins when they hit 30. I'm going to sell 10 Bitcoins when they hit 40. You put all that in the computer and you wait. It doesn't buy it, it doesn't sell it unless those things happen. You set those parameters up in a trade. And you wait. You go about your business. You go to work, you go on a hike, you go swimming, go to the beach, whatever. One day, it drops to 30, and boom, you have 10 Bitcoins in that account. And then a few days later, it's at 40, and boom, you've got 10 times 10,000, $100,000 in profit. Now, let's imagine that you did that with leverage. You know it's in a range, you know it's going to 30, you know it's going to 40, you know it's going to go back and forth. So let's say that you got just a 10x leverage. Well, the scenario I just described, you just made $1 million. You made $1 million. You went to bed and you woke up and there was $1 million in your account. That's a real thing that happens to people all the time. Now, sure, you've got to risk the money in the first place, but let's say you didn't want to do 10 Bitcoins, you want to do 1. So you buy 1 Bitcoin at 30. You set it to sell at 40 with 10 times leverage. A couple days later, you made $100,000. Now, buy 3 more Bitcoins at 30. Now you got 4 Bitcoins, right? You see what I'm saying? You can start with a single seed and grow a whole forest of green. You know what I'm saying? Okay, so that's how ranges work. What do I do? What do I suggest? Buying and holding. I believe that this is going to go busting out at some point, even if it's as far away as 2024, and it could be, but probably by the end of the year, it's going to bust out and head north of 40. And when it does, what's going to be happening then? Well, that 80,000 that might hit, you're going to make 50,000 per Bitcoin at that point. You bought 10 Bitcoins at 30, you sell 10 Bitcoins at 80, and you just made $500,000. So that's up to you. How you want to play that, how you want to do that. I myself like to hodl. I'm a hodler, right? I like to buy low and hold on to stuff. I think the entire market is going way up eventually. So I'm going to hold on to it. I'm going to wait till, it's worth a whole lot more. But how do I do that, right? What's the subject of today's class? Okay. The subject of today's class is buying the dip, right? How and why. You already know how. You watch the cycles, you watch the trends up and down. When you get in a range like this, you've learned that that's good news because you can track it easier. Now, why do you buy the dip? Why do you do any of this? And there's two reasons. I would say there's really two reasons that you do any of this. What is the why to any of this? I would say, first of all, it's because you're trying to make money right now. That's the why for some people. I want to watch this dip. I want to watch this range. I'm going to make money right now. I'm going to buy at 30. I'm going to sell at 40. And I'm going to do it as many times as I can. And I'm going to make 10,000 off each Bitcoin each time. And by the time I get through 2 or 3 of these trades, I'll have another Bitcoin. Now I'm doubling my money each time. Now I'm making 10,000 times 2. Now I'm making 10,000 times 4. Now I'm making 10,000 times 8 every few weeks. That's a day job, by the way. That's a full-time job. You got to track this stuff and really know your stuff. You got to watch all these videos and stuff. So this makes you a day trader. This makes this a job. Now, of course, $10,000 every couple week job is a great job. So you can have this job and be happy and live your life and pay your bills and support your family if you're paying attention. But don't start this job with money you can't afford to lose because you never can tell. You can put everything in there and boom, it just disappears on you. So be careful, okay? Like I said, this is not financial advice. I'm just telling you things that are possible. The other why is for hodlers, people that are holding for the long term, looking for dips, tracking ranges, tracking trends, looking for dips to buy. And every single time you hit a dip, you buy your favorite stuff and you hold on to it for the long haul. So now that brings us to the second part of this video, what to buy, right? Because you bought the dips, you want to buy the dips, you understand how it works, but what do you buy? And that's a great question. So now, what I would like to say when it comes to this is really up to you, okay? You need to figure out what you want to buy and why. Are you looking for things that are going to be the most profitable? If you are, you could make mistakes and not make a great profit. So maybe that's not the best strategy. Maybe you want to get something that you appreciate what they're trying to do. Maybe they're working on things for helping other countries. Maybe they're cleaning up oceans. Maybe they're trying to create new monetary systems. This is Independence Day, right? Let's celebrate our independence from traditional financial services. Let's celebrate our independence from traditional banking with all those fees and all those oversights and all those people deciding who you are for your life. Let's get independent. That's the why for some people, right? That's, why they're in this is freedom. Well, okay. You've got to decide what you're going to buy. Maybe you're buying something based on what we call sentimental analysis, emotions, like Dogecoin. Everybody jumped on it, and it worked. I'm not saying it doesn't work. When everybody in the world's moving to get something, it's spiking. That's awesome. I'm not mad at Doge. I got a little Doge. I'm not mad at Doge, okay? But that's not what most people do in the long term, you can. But I suggest a thing called fundamental analysis, which is where you analyze a company. Do I care about the company? I care about a company named Cardano. I care about their plans in Africa. I've been to Africa. I have connections to Africa. So I care about that company, what they're doing. I care about certain companies doing certain things. That's called fundamental analysis. What do I care about? Maybe you care about something completely different. You care about somebody simplifying the exchange of monetary systems within video games. And video games are your thing. So that's cool. You find those guys. Or maybe you're looking for something that can create connectivity between a variety of different banking systems. Those are all different, beautiful things. Those are called use cases. You study a white paper to get use case analysis for your fundamental analysis to decide what you want to do. And of course, then there's just the hardline technical traders doing nothing but numbers. They don't care what the thing is called. They don't care what kind of dog represents it. They don't care what the coin symbol is. They don't care anything about anything that the company's doing. They just track the market trends and all the numbers, technically trading. That's what I was talking about with that range. You could just buy this, whatever it is, and go boom, 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 boom. Now here I made a bunch of money. That's technical trading. And as I have told you in previous videos, we've talked about this, and I suggest a combination of the three. But let's say that you're new to this, and you say to yourself, okay, I get all that, but what do I want to buy? What can go up? You've heard of people getting 1,000x returns, right? And those 1,000x returns turn somebody into a millionaire overnight. Is it possible? Yes, but extremely rare. What do people normally buy? What people normally buy is stuff that's popular. Why is it popular? Because it's going up. What does that mean? They're typically buying it when it's high. They're typically missing the boat. They're not buying something that's going to be spiking. How do you know what your favorites are capable of doing? For that, the last part of this video, that's the what to buy, how to analyze it thing. And we're going to look at that real quick because that is what we call market cap. Take a look at this. On the screen here, I've got you a little graphic that I've made. I pulled a chart. You can see I'm on the USD Markets Chart. This is from today. Okay. You can see that I've got all the major boys here. There's your Bitcoins. There's your Ethereums and Binance and Cardano and Doge. And you can see they're going up and down. Everything's in green. It's a good day. As you can see, 95.7 or whatever, at 95.6, 95.7. We're dead center of our range. So we're working this range just exactly like we have been. This range right here, 30 to 40, we're 35 today. We're working this range exactly like we have been. It's going to be months of this probably. Maybe it'll break out. But let's take a look. This column here, and of course this is just Binance. You can go to any other place, okay? But let's look at this column here. So, take a look. Take a look at this. Now, you see this? You see that number, 646? And it's thousands of millions. This is a billion, right? So this is 646 billion. That's Bitcoin. This is the market cap. What is a market cap? Okay, so let's talk about this first. Let's talk about this. What is market cap, right? Market cap is the way that you can see how much the total of something is worth. You need this information because you need to be able to figure out how much it could be worth. You're going to use basic math to figure out if your idea about being a billionaire because Doge is going to be worth $100 is even possible, okay? It's called market cap, the capitalization of a market, okay? And I put on this thing right here. I put on this, and I hope you can see it. market cap equation. The market cap is equal to, you see it? Market cap is equal to total units times price per unit. This could be stock, this could be gold, this could be anything. Total number of units that are out there on the market times the price per unit is how you get a market cap. Okay, so you see this? This is gold. Gold's current market cap is 11.35 trillion. Gold, as you know, is basically the most important thing on the world when it comes to money. Gold has always been worth money to people. Gold has always been the holder of wealth in the world. There's other things. Sure, there's silver, diamonds, whatever, crypto, but gold has always been sort of the gold standard. It's even called the gold standard. Do you understand? If gold is worth 11.35 trillion, this is all the gold in the world, all the gold on the market. Well, think about that. Think how many tons that is of gold. It's everywhere. It's been everywhere for 5,000 years. Okay? Ancient Egyptians were pounding out gold. Okay? Gold has been a holder of value and wealth and worth on this planet since humans began. Gold. 11.35 trillion. Now that's what all the gold in the world on the market is worth right now. That's based on exactly what the market cap calculation says. The total number of units, let's say ounces of gold in the world, the total number of ounces of gold in the world times the price of gold per ounce equals $11.35 trillion. Now, do you think that the market of all crypto will one day equal gold? Now, this is a philosophical question, okay? This is not a question for the faint of heart or the fast time buy in, buy out, pump and dumpers, okay? This is a philosophical long-term question. How high do you think this market will ever be? Will it be equal to gold? Will it be equal to a country? Will it run the majority of countries in the world and be equal to more than that? Well, you got to figure that out, because one thing you can never do currently is base your market cap analysis off of anything even remotely similar to gold, because there's just not that much power yet behind this. Gold is accepted in the entire world. Crypto is not accepted almost anywhere yet. Crypto is going to have to be accepted in almost every marketplace in the entire world before it can approach the value of gold. But we do have a really great value on crypto. It is being used by a lot of major corporations and a lot of individuals and now some countries. So look, the current market cap of all crypto is 1.5 trillion. And I think we've reached and broken, I think we might have broken 2 a couple times, but anyway, let's just go with 2 trillion. Is that the market cap of all crypto, 1.5 trillion currently? That means if you're trying to plan what you think your particular favorite is going to go to, you can't just use numbers willy-nilly. You can't say, oh yeah, Doge is going to be worth $100. I bought Doge for a penny. When it's worth $100, I'm going to be a quadrillionaire. That's not how it works, okay? How does this math work? Follow along with this. It'll help you. Let's take my Doge example. You see Doge example right here? Right now, there's 30 billion. You see Doge? You go across. 30 billion market cap of Doge. Now, let's say that we thought Doge was going to be $1 trillion. Now, get this straight. If Doge is $1 trillion coin at some point, that would mean the market would have to be 5-10 trillion. We would have to approach gold for Doge to be worth $1 trillion. But let's just go with, I'm hopeful, I love Doge, I think it's going to be worth $1 trillion market cap. If that's true, okay, then that would mean that we take the 30 billion we have now, that's the current market cap, and we take our $1 trillion goal, 1 trillion divided by 30 billion, we get 33.33. If Doge becomes $1 trillion market cap coin, which is highly unlikely, extremely dangerous thought process, but let's say it did. then we get a 33 times multiplier. That means 25 cents. That's what it is right now. It's a quarter times 33 is $8. So that means $8 is possible for Doge if Doge becomes a $1 trillion market cap coin. I would say if this market continues to grow and all the money of the world continues to grow and all the markets continue to grow, gold could go to 20 or 30 trillion, America could go to 30 or 50 trillion, right? And so Doge, sure, maybe Doge reaches a trillion. I think a $10 Doge might be possible. But when you start talking about a $100 Doge, you're talking about a crazy thing that is virtually impossible in your lifetime. It is possible, anything is possible. But a $100 Doge would mean a Doge worth 10 trillion or 12, 15 trillion dollar market cap. I mean, you're talking about gold. Doge equals gold in the whole world, the history of the world. 5,000, 6,000 years ago. That's Doge. I don't think so. Okay, I don't think so. But this is how you plan. Hey, what if I buy this one? This is a lot lower. Yes, it is. Does it have a good use case? Is it possible that it goes up? Let's use an ETH example because Ethereum is the most popular thing trading right now. It's trading at higher volumes. You notice that it's trading at this is a 40 million trades going on. This is a volume 40 million. This is 29. So this is about 10 million more for Ethereum. That means that's a 24-hour volume. It means Ethereum's trading a lot right now. Ethereum is by far the most traded coin today. Okay, let's take a look at what that means. So right now, sorry for my extra end. Ethereum's $250 billion market cap right now, 250 billion, and it's worth about 2,400, give or take. Okay, let's say that we think Ethereum's going to 2 trillion. Now that's a lot more likely than Doge, by the way, being a trillion, because Ethereum has a massive set of uses, a massive, it's like a spider web. Half the things you know about, half the wallets and coins are related to Ethereum in some way. Ethereum is a massive spider web. The fact that Ethereum could be worth 2 trillion in a couple years, that's totally doable in my mind. Even though that's more than the current market cap of all crypto, I think a $2 trillion Ethereum is possible. If that's true, then what we do is 2 trillion divided by 250 billion, which is what we have at current market cap, you get 8. The most you're going to get, more than likely, the most you're going to get out of Ethereum is an 8x. 240 becomes 19K. So $20,000 Ethereum is possible. That's crazy. That means the market cap of Ethereum would be equal to $2 trillion, right? Do you believe in it? If you believe in it, you buy it at 2,000, you hold it to 20,000, you 10x yourself. That's what you got. You got about a 10x possibility when it comes to Ethereum. You got about, 25, 30x possibility when it comes to Doge. This is how you calculate. So now you're looking at something that maybe has a 10 billion. You're thinking, wow, or even less, something that has a 1 billion, a low market cap. You're like, okay. And this is what people do. They're gambling on lower market cap concepts, thinking to themselves, okay, that could succeed to a trillion or 2 trillion market cap, and that means I would be blah, 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 right? And what I do, okay, all right. What I do is a little of everything. I do some stuff like BTC and ETH that I know is going to be around forever. And then I do some crazy, super cheap 0.0005, whatever stuff. Because if it has a good use case or has something fun about it, or maybe there's some sentimentality to it, maybe there's some famous people talking about it, whatever, it's worth a chance. Buy a few thousand of them, see if they get to 10 cents. But you don't buy something that has a market cap of 10 billion that costs 0.0005 and think it's going to go to $100. Do you understand the math? You take $1 trillion, half a trillion, you divide it by the current market cap of that coin, you get a number that is your multiplier that's theoretically possible that you could see that multiplier. Do you understand the math? Okay, what I do is some totally crazy stuff, some super cool stuff, and then some stuff in the middle. Some stuff that I think is very undervalued. I think could go very, very big. And so this is the calculation that we use. If you look down here, right down here at the bottom, you see this section here? If you look at that right there, and you see this, these are the GDPs, this is the gross national products, okay? GNP, I think I put the wrong initials there, sorry about that. Anyway, this is what a country is worth or producing in general. 21 trillion US, 23 China, 9 for India. So you see these numbers. The reason I put these numbers in there is so you could have a comparison. If countries are doing 20,000, the biggest countries in the world, 20 trillion. If gold is 11 trillion, you don't want to do some math where you say Doge is going to be worth $10 trillion. You understand? Use your knowledge, use your math, and come up with an idea. Now you can utilize this tool as well as other tracking tools, as well as sentimental ideas, as well as fundamental analysis. You can put them all together and you can end up in this amazing world where you have all these pieces of the puzzle falling together and you say to yourself, okay, I think this particular coin has a shot. It's undervalued right now. There's only 6 billion of it. I think it'll be worth 10 times that easy, maybe 100 times that easy. If you've got a $6 billion market cap coin that you are positive is going to be one of the dominant forces in the future, you're looking at maybe something worth the money of Bitcoin, 600 billion. So you're looking at a 100x coin. There you go. You found your baby. You found your fave, right? All right. So that's it. That's a walk through the current situation with the range, how to trade up and down, how to buy the dip, and especially a look at market cap concepts, how to understand market caps, and not only understanding market caps, and how to buy dips and the range that we're in, but figuring out what you're going to buy and why. All right. That's it. That's buying the dip. This is Dr. Chef's Crypto. If you learned anything from this, please like and subscribe to this. Please hit that notification bell so you can get notifications when I put out new stuff. I really appreciate you guys. I'm trying to grow the site because really my goal in life is to try to help people when, just in general. But when it comes to this crypto stuff, the reason Dr. Chef's Crypto is a thing is because I really want to try to help people figure this stuff out and not waste a lot of your time and money. Focus your energies, learn how this stuff works, and hopefully everybody has a wonderful, exciting crypto life. All right, you cryptographers, you keepers of the crypto out there, thanks for playing. This is Dr. Chef. Have a fabulous 4th of July week, and I will see you soon.